Hi, I'm Tarun Mahajan. I'm basically a chartered accountant, but I'm more into valuation of securities, as in, valuation of startups, valuation of their equity shares, and maybe their more complex securities. Welcome to my DLC talk. Today, I'm going to talk about recognition of startups at various platforms which are provided by Government of India, as well as valuation of startups I'm going to talk about. So the whole world now is believing in India growth story. India is aspiring to be a $5 trillion economy. Besides the contribution of traditional sector in this growth story, today we are seeing more contribution of startups. Startups are making our life easier. Every single month, India is producing a unicorn. We have one of the biggest startup ecosystem after USA and China. In year 2021 alone, Indian startups have raised several $billion of the fund, $7.16 billion of the fund to be precise, from Indian capital market through public issues. I'm not saying that every startup will become a unicorn, because 90% of the startups actually practically fail. But that cannot stop you from contributing to our economy. If you have a fantastic business idea, let's take an example. So the whole world is shifting towards electric vehicles, right? So the next big problem will be like disposal of lithium ion batteries or maybe some more advanced batteries. Now you are a chemical engineer, you are an electric engineer, you found a solution to this problem, that how will I dispose those batteries, or how can I recycle it so that it become environment friendly. And you did a lot of research into it, and you got a US patent for the same, and companies like Tata Motors and other companies have started talking to you. Maybe they have signed some memorandum of understanding that once you make the final product and roll it out, thereafter they will be one of your biggest customers. But having an idea alone is not enough. The next thing you will need is a huge amount of fund. For next 3, 4, 5 years, you will have to burn cash crazily. So definitely you will need a valuation, and then you will need services of professional like us who are registered valuers, or maybe sometimes the merchant bankers also. But before valuation, I do valuation day in, day out, and I see startups struggling for a good valuation. But before the struggle for startup valuation, there are several other struggles, maybe under the Income Tax Act, maybe under some other laws. So, how to run your startup smoothly through this funding process is a question. And the answer is, get recognized your startup at DPIIT, that is Department for Promotion of Industry and Internal Trade. Also get register your startup at MSME platform. So let's first talk about how to get recognized your startup at DPIIT platform. But even before that, what is the advantage? Why should I do one more formality? Is it advantageous to me as the promoter of a startup? And my answer is yes. I will not go into technicalities of the Income Tax Act, but if I explain you simply, if your share has a face value, par value of rupees 10, an investor says that, okay, I am giving to you 1000 rupees per share, that is 990 rupees premium investor is ready to give. There is one section in Income Tax Act which says that, oh my God, you sold 10 rupees of share for 1000 rupees, you made a profit of 990 rupees, give income tax on it. You will say, hey, look, wait, I have not made profit. This is just issue of my share. I'm just raising fund. Oh, so what do you do then? You can get exemption from this section. If you are recognized with DPIIT and then you claim this exemption from income tax department, they will give you exemption and your life will be simple, smooth. Second advantage of getting recognized as a startup is easier compliance with labor laws and environmental laws. But once you are recognized with DPIIT under 6 labor laws, your inspection will not be done. A simple self certification alone will work. Then, if you are recognized with DPIIT, then it is easier to get the patent. Your patent registration fees will be reduced and the process will also be made easy for you. Unfortunately, tomorrow, if the startup fails, then it will be easier to wind up the startup also. Suppose you want to become a supplier to the government for goods or services. So government follows public procurement norms and you need to fill up the tender and give the earnest money deposit, a security deposit. If you are a recognized startup, in that case, you won't have to give the earnest money deposit, that is EMD, and other procedures will also be smoothened out for you, right? So that's the advantage. Now you're thinking that I must get recognized my startup with this organization, DPIIT. But there are some criteria to be fulfilled. Number one, you are not a proprietorship, right? You are registered as a private limited company, or you are registered as a partnership, or you are registered as a limited liability partnership. I'll advise get register yourself as a private limited company. Your private company should not be older than 10 years. That is, it should be a new private company. Your annual turnover should not be more than 100 crore rupees, which is a very liberal limit. Usually, startups don't have turnover at all, and the limit given here is 100 crore rupees. If you fulfill these criteria, then you can register yourself. Second thing I will advise is to register yourself as MSME, that is micro, small, and medium enterprise. If your investment in plant and machinery or office equipment is up to 1 crore rupees and your turnover is less than 5 crore rupees, you are a micro enterprise. If your investment in machinery or equipment is up to 10 crore rupees and your turnover is up to 50 crore rupees, you're a small enterprise. If your investment in plant and machinery is 50 crore rupees and your turnover is up to 250 crore rupees, you are a medium enterprise. So, most of the startup will fall in any one of these three enterprises. And the advantage of getting it registered with MSME is if you supply goods or services to some other company, say for example, they will have to make your payment within 45 days. If they don't make payment within 45 days, they will have to pay you interest at the rate of 3 times the bank rate specified by RBI. And also in their financial reporting, they will declare themselves like a defaulter, that we are in default of payment to the MSME. So these are advantages of getting recognized your startup on these platforms. Now, coming to the crucial question, what is the valuation criteria? How do the fund managers look at the valuation? So for the sake of valuation, I'll divide all startups into two parts. Pre-revenue startups, not yet generating sales, and the post-revenue startups. Many of you must have seen the Shark Tank seasons, and you know that pre-revenue startups usually don't get funding. Uh, I'll give you a rough idea that valuation of startup is based on 5 criteria. And suppose I am the investor, I say If you score 100 on 100 on all these 5 criteria, I'll give you valuation of $5 million, maybe, or maybe $2 million, right? But the question now is, I'm giving you $1 million for scoring 100% in one criteria. And there are 5 criteria. One is your idea should be a sound idea. Say you come up with an idea of car washing in metro cities. You know, this Cars 24 and many such companies are emerging. And in their yard, they have 500,000 cars standing over there. Before they sell it, it need to look glamorous. They need a proper chemical wash for their car. And you come up with an idea of car washing. Or maybe the battery disposal idea. Or maybe the delivery lockers idea. Many such ideas are there. If you have a sound idea, which is actually solving problem of the people, I'm giving you valuation of say $1 million. If you have created the prototype also, that yes, this is my product, see it's working, fine, I'm giving you another $1 million valuation. Then your managerial quality, I'm giving you another $1 million valuation. Then your strategic relations and tie up with customers, vendors, etc., another $1 million. And finally, if you have rolled out the product, even if you are not earning revenue, another $1 million. If you score 100%, if you score 50%, this $5 million valuation will become $2.5 million valuation, like this. What about the post-revenue startup? So most of the angel investors do a simple math. They say 3 times the amount of sales revenue. You're making sales of 10 crore rupees, your valuation is 30 crore. You're making sales of 1 crore rupees, your valuation is 3 crore rupees. Number one. Second valuation criteria is multiple of a comparable startup. So comparable startup has been recently funded of maybe 1,000 rupees per active user, and you have 50,000 active users multiplied by 1,000, and accordingly your valuation is set up. And the last but not the least criteria is projecting your financial statements and cash flows and making valuation on the basis of projected financial statement. Here investor will need at least 25% per annum return kind of a return. They'll discount cash flows and make valuation. But for that, you need to have a proper business model ready in the Excel sheet. So you need to take professional services of people like us who prepare your business model based on which the investor will make a valuation. This is not the only talk we are having. In future, we may discuss more about startup recognition and its valuation. Thank you. Thanks for listening.